how much you're going to earn. Financial services, top of the list, 1.844 million shillings average. Second, energy, that's interesting, isn't it? 1.747 million. Third, administration, transport, 1.396. Professional services, 1.243. And then bottom is agriculture, only 334,000 shillings a year. Hospitality, I'm surprised that's so low. Well, I suppose that's waitering and so forth, 434,000. Manufacturing, 502,000. So very, very interesting report they've put out there. And they made some interesting points. Firstly, the private sector, and this is private sector earnings, continues to account for approximately 70% of formal employment overall, constitutes over 80% of formal jobs in most sectors of the economy. So that's why people talk about the private sector. That's why it's so important and really is an engine for job creation and growth. I found this interesting. Real estate forms almost 10% of GDP, but only contribute 0.2% to formal employment. I thought that was very strange. And basically, between 2014 and 2018, financial services and energy sector employees were amongst the highest paid. And there's a lot of oil and gas in this region, so we should continue to see that perform very, very well. I think financial services, I wonder if that includes fintech, because that would be an interesting comparison as well. Hopefully we'll get in Einstein at some point to talk us through that report. Let me now turn to something that a gentleman called Makotani tweeted this morning. Newspapers on their deathbed is the headline. And what you see here is newspaper circulation has been in decline. That's 2013. 109,957, 2018 74,304. That's a declining trend line if you're looking at trend lines. And what's that telling us? It's telling us that basically people are not receiving their news like they used to by buying the paper, having it on their desk, flicking through it. That's what we used to do in the old days. That's the declining situation. And that took me back to a very famous Austrian economist called Joseph Schumpeter. And Schumpeter said about capitalism, he called it creative destruction. Schumpeter describes creative destruction as the process of industrial mutation that incessantly revolutionizes the economic structure from within, incessantly destroying the old one, print media, incessantly creating a new one. And what I call it a Schumpeter moment in the media sector, declining print media. And look at this, this is interesting. This is the biggest internet platforms. This is where those eyeballs that used to buy print media have gone. WhatsApp, Facebook, YouTube, Instagram, FB Messenger. And this is the new economic structure that's being created, and that's why the media sector remains in what I call a Schumpeter type moment. And you can see that in Nation Media share price, which is at a 10-year low or close to, and that's a consequence of these trends, which are really macro gale force winds. And if I was to advise the nation, and I certainly don't, I would tell them that they've got to go down the way of super micro payments. Not necessarily $1 a day subscription, but you essentially read an article, 5 bob, 10 bob, things like that. I think that's where they've got to innovate, and that's where they can really get back on track and on trajectory. Now, staying with Kenya, this was quite an interesting tweet I saw from Mir Thacker via KNBS Stats. And this is the price of key commodities over 2014 to 2018. Tea prices up 36% over that period. Sisal, 48%. Sugarcane, 26%. Maize, would you believe it, down 32% over that reporting period. Beef, third grade, I don't know what third grade beef is, up 39%. Pig meat, plus 14%. There's an enormous pig shortage in China. That's because they've got African swine fever, so maybe that's a market our folks should be looking at. But very noteworthy in this basket is really the underperformance of maize, which struck me as quite an interesting development, and why farmers seem not to be that keen on growing maize. It's something we need to look at. And then one more statistic that came out of here is this is our percentage of imports of sugar. And this is because we're not producing enough sugar. In 2014, 32% of sugar imports was imported. In 2018, it was 58%. So that's an interesting, it means we're clearly not producing enough sugar, and that's why you get those moments when enormous amounts of sugar are imported into the economy. It's a basic commodity, and we, of course, have a very sweet tooth, as I keep noticing when I ask people how many sugar spoons they want, and quite often it's over 5 or 6, but that's a different point. That's to do with nutrition as well. Now, let me turn to this tweet from Sunil Sangha. Yesterday we were talking about the National Bank of Kenya board demanding a higher price from Kenya Commercial Bank, and Sunil tweeted, despite a 58% non-performing loan book and continuing non-compliance with statutory capital ratios, the independent valuer and the board believe that the valuation should be at a premium to book value. Wonder what they are smoking, he asked. And then just to touch on one other Kenyan item, using data from 18 exits compiled from 10 private equity funds operating in the region, the data shows that on average exit yields ranged between 17 and 23% on a dollarized internal rate of return. That's pretty good in a world where there's a lot of zero interest rate money and there's a lot of negative interest rates. That looked to me as a very high number. And if that goes around the world, I'm sure a lot of money would come in, probably more than they can absorb, given that type of return that they're generating. Let's turn to Angola, the third biggest economy in sub-Saharan Africa. We're expected to overtake Angola by the year 2022, but it's a big economy. This is the new president, well, he's not so new anymore, João Lourenço, and the Financial Times had an excellent article, and I just want to take some key points from there. They're asking, can he cure Angola of its crony capitalism? Not far from the flashy skyscrapers of downtown Luanda, the capital of one of Africa's supposedly richest countries, is a public morgue. Celestino Chivava, who worked in the Angolan oil industry until he lost his job after the price collapse of 2014, describes how families wash the bodies of their loved ones on a slab outside. They put perfume in the mouth to stop the corpse smelling, he says. Sometimes when the electricity goes off, the bodies get stuck together and the families have to pull them apart. In 2011, the IMF identified a $32 billion discrepancy linked largely to quasi-fiscal operations by the state oil company Sonangol that did not appear in the official budget accounts. So he's trying to clean up a very, very big mess, but the jury is still out about this. About his anti-corruption drive, it's more of a vendetta, says Ricardo Soares de Oliveira, an Angola expert at Oxford University, and less of a systemic cleanup, though I'm not closing the file on future progress. Lorenzo signed a $3.7 billion credit facility with the IMF, the biggest ever such arrangement made by a sub-Saharan African country. And essentially that's a good thing, I think, because the IMF will come in, they'll kick the tires, they'll check the accounts, and this is something that's not been happening, and that's why all that money went missing, for example. But he's dealing with a very tough hand. Firstly, we often talk about our debt to GDP getting uncomfortably high. If you look at Angola's debt to GDP, it's close to 100% already, so way over what is recognized to be appropriate. So he has got very little room for maneuver or for additional borrowing, and that's been one big challenge. Then look at this. This is the Angolan oil production, nearly 2 million barrels of oil per day in 2010. Now it's about 1.55 million, so nearly a 25% drop in the oil production. On top of that, you got lower oil prices. They devalued the currency by a massive 85%, and they had to do that because this is what the resource curse does. The currency was so strong that they were importing everything from diesel to champagne. There was no real creation of businesses outside the oil and gas sector, and that essentially could not continue forever. And he was bold, a little bit like Al-Sisi. On the other side, you've got Nigeria, Baba Goslow, who refuses to devalue the currency. So he's done the right things, but the question is, where's the growth going to come from? One of his ministers says, every stone you turn, you don't find a pearl, you find a snake. And then Marquez finishes off by saying he cannot be a reformist by saving the party and throwing breadcrumbs and false promises to the people. So very challenging environment in Angola, huge borrowing spree, very indebted, oil prices have gone down, and you're now trying to deal with the debris of that bust that they're currently dealing with. Now, I mentioned this to you yesterday. This is Hemedti, of course. We've spoken about him. He seems to be the real power broker in the Sudan at the moment. And there's a fabulous report in the African Business magazine analyzing where he's getting his money from. And a lot of people believe that it's the UAE and Saudi Arabia who've been writing the checks. They deposited $3 billion in the central bank's account. But it's turning out to be something very different. And it's turning out that he is financing himself. And let me explain to you how. He has a violent past. He controls a paramilitary force estimated to number as many as 40,000. Vast personal wealth accrued from the gold trade, along with outsourcing his militia to the former regime in Saudi Arabia to fight the war in Yemen. Sudan produces 107 tons of gold. It's the third largest gold producer in Africa, after South Africa and Ghana. And 70% is estimated to be smuggled abroad. Now, he controls one of the country's most lucrative gold mines. It's called Jebel Amr in North Darfur. Do you remember the problems we had in Darfur? So he's got that gold mine, and in 2015, the UN Security Council found that that gold mine was producing $54 million a year. So it can only have gone up higher. Gold prices have gone up higher on that safe haven bid we've spoken about before. And apparently he is obviously using that money to maintain control. And he's getting the money from the gold mine. And this is what a Sudanese says: I would say that Sudan is occupied now because the troops that he is using to control and monopolize power, most of them are not even Sudanese. They are recruited from Chad, Mali, and Niger. They are from the Sahel. On top of that, he has sent 15,000 of his troops to fight the war in Yemen against the Houthi-led militia. And remember, the UAE this week have withdrawn from Yemen. That's an interesting move we can discuss on another show. But it is being speculated that he's being paid $2,000 to $3,000 a month per soldier he's sent to fight in the Yemen. So that's 15,000 times $2,500 per month of income on top of the gold income I've been just telling you about. And that's why we have all these gold stories, don't we? And the UAE is the biggest off-taker of African gold right now. So it's not as clear, is it? Is he being funded, or is he funding himself? That is the question we need to ask ourselves. And then we come back to the old colonial economies where we essentially funded our own occupations. It seems to me this is no different. He's able to control it. We've spoken about the revolution. They think they've made a deal, but really he remains in charge. He's got the cash, he's got the firepower, and really I think, we got to watch how this unfolds, but he's really still very much in charge. Zimbabwe has a debt mountain. IATA, which is the travel association, says Zimbabwe owes airlines $196 million. They went to visit President Mnangagwa yesterday to try and agree a payment plan. At the same time, Zimbabwe has offered Treasury bill for sale. Reserve Bank of Zimbabwe has carried out its first public Treasury bill auction in years, hoping to gauge appetite for the paper while preparing to issue a long-term infrastructure bond. Now, what is the inflation rate in Zimbabwe? 100%. Okay. What is the interest rate they're offering on their T-bills? Let me tell you, 91 T-bill at 16.5%, 180-day T-bill at 19.6%, and 365-day T-bill at 17%. I'm not sure how many of those T-bills were bought, but we'll know by tomorrow. And just a final comment, Nestle has been replaced in Nigeria as the third most valuable company by Airtel, which was listed in Nigeria, having been listed in London, but fell sharply on listing. Now, a very hard-hitting report from Ashmore. Ashmore is an emerging markets investment house, and they say Turkey is heading for economic collapse, which is, I think, what I've been telling you for the last few episodes. And in this report, it applies to populist policy makers the world over. And let's take his example. Erdogan risks pushing Turkey's economy into an economic collapse similar to those seen in Latin America under populist regimes, according to Ashmore. While more diversified than Venezuela's oil-dependent economy, Turkey is currently on a very similar path of missteps that are likely to lead to ruin. Capital controls, nationalization, and other policies designed to prevent the private sector from protecting its property as the macroeconomic environment deteriorates are the next logical policy steps that will follow in Turkey. This gentleman is called Jane Dane, and he's their research analyst in London. The longer he delays, the bigger the cost, which is why politicians who go down the heterodox route, i.e. Erdogan, rarely change tack, and they almost always end in crisis. Bad economic policies begin to extract a political cost. Instead of fixing the causes of the underlying economic problem, government decides to attack the symptoms of the problem. The real problems are ignored and get worse. They include bad monetary policies, increasing interventionism, low savings rates, and bad foreign policies. The government blames everybody but itself because this works politically. But investors and businesses become more worried. Erdogan will need more and more scapegoats as the economy worsens. This results in capital flight, declining investment, and other hedging strategies. The government starts to blame the private sector for bad performance. Eventually, the government has no financing, no growth, and plunges into a crisis. And that's what's going to happen here at the rate President Erdogan is going. I called him a Shakespearean figure. I said he has slayed enemies, real and not real. His chest has been puffed up with pride. He even rescued the Emir of Qatar, but he has now met his match. And that match is the market. And everybody knows that, and we all know it. There has been no winner against the markets, and it's certainly not going to be Recep Tayyip Erdogan with his voodoo economics. The European Union is considering tough measures against Turkey because of its insistence on natural gas exploration near the coast of Cyprus. That's going to be another whammy, and it will soon be a triple whammy. Let's turn to the commodity markets. This is very interesting. This is the price of cobalt. Cobalt, of course, is used for mobile phones. It's used for rechargeable batteries that power electric vehicles. Last year, Congo produced 72% of the world's cobalt. But look what's happened. This was the price before everyone got excited. Then we took off to above nearly $45 a pound, and we've collapsed all the way down to $12 a pound. That is a dramatic price drop. And the point is, what this article is saying, artisanal miners have now left cobalt, they've gone to copper, which is similarly in a downtrend, as you can see. We're near the lows here. That's the low that we've seen all the way since a year ago. And essentially what's happened is it's a boom and a bust. So we've had a cobalt bust. At the moment, diggers prefer to work the copper, and how artisanal miners, these are people who are mining practically with their bare hands, are the swing producer in the Congo. Let's now turn to international markets. This is a 1,000 Swiss franc note. It is the most valuable note in the world. It is worth more than $1,000 US. So that note, what this article is saying, the Swiss National Bank is saying there's evidence that people are hoarding these banknotes, keeping them in the safe, keeping them at home. And essentially, what it says, the majority of Switzerland's high denomination bills are effectively parked in vaults or stuffed under mattresses, according to a Swiss National Bank working paper. Now, do you know why that's happening? Because if you put that in the bank, you're going to get back less than 1,000 francs when you go to withdraw it because of negative interest rates. If you put it under your mattress, when you remove it, it's still going to be 1,000 Swiss francs. So unless you're economically a little bit silly, you're going to start hoarding these notes as opposed to putting it in the bank. 80 to 90% of these notes are currently being hoarded and under people's mattresses or in their vaults. And this is a consequence of that whole negative interest rate phenomenon that I've been speaking about. Switzerland is an extreme example. Let's turn to sterling. Sterling had a flash crash. In the middle of the night, I can remember I woke up for some reason and it had just collapsed all the way down to around 124.40. Then it recovered all the way up to 134. And we're now back down. We got down as low as that level of the flash crash. We had a little bit of a bounce today, but that's really an interesting development that we're seeing. People are very nervous about the UK economy. They're nervous about whether the incoming Prime Minister Boris Johnson, and you will have noticed today that the ambassador to Washington, the UK ambassador, has stepped down. Obviously, he heard some comments Boris made about him yesterday. Boris is friendly with Trump. He took Trump's side. The ambassador had to fall. But the point is that the pound has really fallen quite dramatically, and this is on worries about a hard Brexit, on how things are going to play out in the United Kingdom. So it hit a 27-month low earlier today and then rebounded a little bit. Now turning to Bitcoin, of course, which seems to feature in practically every bulletin I do. Bitcoin hit $13,000 early this morning when you're probably still in bed and not even had your breakfast. And essentially it is now corrected. It's around 12,300. It's still up from levels of around 4,000 at the beginning of the year. So it's gone up exponentially. And actually our guest in the second half, Mr. Kai Wolf, was just talking to me before I came in here about the exponential nature of technology. And I think Bitcoin kind of expresses that exponential nature. And you know, I keep mentioning that thing about the parabola. It is a curve, each of them feels unmistakably. It is the parabola. They must have guessed once or twice, guessed and refused to believe that everything always collectively had been moving toward that purified shape latent in the sky, that shape of no surprise, no second chance, no return. And that is when you get a parabolic move. You buy something at 1 and next thing you know it's at 10. And you know, it's happened in a blink of an eye. That's called parabolic move in the markets. It doesn't happen that often. Paul Virilio, the French philosopher, said, wealth is the hidden side of speed, and speed the hidden side of wealth. If you want to make money, you want to make it like Bitcoin has been making it for you this year. And let me leave you with 2 more stories. These are 1,000-year-old coins. They come from a place called Kilwa in Tanzania. And let me tell you what's been discovered. These coins have been discovered in Australia. Right? Let me show you. So that's Tanzania. Kilwa's here. All that distance, these coins got all the way over there. People talk about Columbus and Cook discovering Australia, but Africans were probably the first people after the Aborigines to get to Australia. Think about that. And it's an extraordinary story because it tells you that this whole economy, what I call the Indian Ocean economy, was a zone of long-range navigation. It was achieved because of the reversible escalator monsoon wind. The wind would take you from over there, bring you all the way down here, all the way up to Mozambique. You'd have to wait a month, and the wind would change, and it would take you all the way back. And that's why this Indian economy was so vibrant, even 1,000 years ago. And its resurgence, of which I am so sure, because now we have billions of people living here. This is if you look at it through this lens of the ocean, that is one of the biggest economies that could possibly exist. Now, these copper coins are from Kilwa, an ancient African trading port in Tanzania. Let me show you. These are the ruins of a mosque in Kilwa, as you can see. But the question is, could it have come with the Portuguese, who raided Kilwa in 1505 and then came all the way to East Timor, and it was just 3 days away from Australia at that point. But this Kilwa is the oldest urban settlement in sub-Saharan Africa. The Arab traveller Ibn Battuta mentions it in the 14th century. John Milton, the English poet, mentions it. It is older than Delhi. Would you believe it? And really, it's quite an extraordinary story, speaking to the trade, the navigation that occurred in that Indian Ocean economy. 2 things to leave you with. The Emir of Qatar was meeting with Donald Trump yesterday. And Donald Trump said, it's a great honor to be with the Emir of Qatar, a highly respected man, a real leader, he said. Of course, everyone was bashing on Qatar, weren't they? Trump also joined in the bashing. Seems to have now been more reconciled to the Emir. And I called him the comeback kid Emir, because it's been a year or 2 where he's been in the doldrums. Saudi Arabia tried to even build a moat around him so that the whole of Qatar would be blocked off. They didn't achieve that. You remember yesterday I was telling you about this gentleman, Hu Ziyin, the only man who's tweeting Xi Jinping's thoughts in real time. Forget all the media, the Chinese media. Just follow this man if you want to know what Xi Jinping is thinking. 2 things I want to leave you with. Hong Kong. This is what he said about Hong Kong. The US and UK won't shed tears for the fading of Hong Kong, he said. 1 country, 2 systems gives Hong Kong freedom to develop. If Hong Kong society regard it as freedom to launch extreme politics, The city will soon exhaust its advantages, becoming the laughing stock of Singapore and South Korea, he says. Of course, the Hong Kong protesters had a significant victory. It is the only time the supreme and paramount leader has made a volte-face that I can recall. Carrie Lam said the extradition law about which they were complaining is dead, and essentially I think the Chinese realized they could not do to Hong Kong what they had done to Xinjiang. But this is all about the periphery. The other periphery, of course, is Taiwan, and this is what he's saying about Taiwan. If US arms sales to Taiwan crosses the line of Beijing, and Beijing announces the PLA will destroy the weapons if they are placed on the island, and he says, in that scenario, Washington, Taipei, and Beijing, who will be the first to flinch in the showdown? Don't play with fire. The tinderbox is a periphery. This is The Smart Investor. This is Metropole TV. My name is Ali Khan Satchu. Join us after the break for an in-depth discussion with somebody who was one of the pioneers of the internet and technology sector. That is Kai Wolf. Thank you. See you after the break.